Howard Marks, the billionaire who called the 2008 crash and the dot-com bubble, just moved $20 billion into cash and sent his final warning. But the media is completely ignoring it. Most people have never heard of Howard Marks, which is exactly how he likes it. While other investors are constantly on TV making bold predictions, this guy has quietly built one of the most successful investment firms in history. His company, Oaktree Capital, manages $190 billion. That's more money than most countries have in their entire treasury. 3 weeks ago, he did something that should absolutely terrify you. After years of being cautiously optimistic, Marx just published what he's calling his most important memo ever. But here's the scary part. He didn't just write some warning letter and hope people would pay attention. He put his money where his mouth is in a big way. His fund just raised over $20 billion in cash, sitting on the sidelines, waiting for something. When someone who's been investing successfully for 50 years suddenly hoards that much money, it's definitely not because he thinks the stock market party is going to continue. Think about this for a minute. Marx has lived through every major financial disaster since the 1970s. He saw the savings and loan crisis destroy banks. He watched the dot-com bubble wipe out people's retirement savings. He called the housing crash that devastated millions of American families. This guy has seen it all, and he's telling people he's never been as concerned as he is right now. In his latest memo, he's using language he's never used before. Words like unprecedented risk and systemic fragility. Even during 2008, when major banks were collapsing left and right, he wasn't talking this way. But here's what makes this warning different from every other market prediction you've heard. Marx isn't some financial commentator trying to get attention or sell newsletters. This is a guy whose investors pay him based purely on results. They don't care if he's entertaining. They care if he makes them money and protects their wealth. And right now, he's telling them to brace for impact. The patterns he's seeing aren't the usual stuff everyone talks about on financial TV. Sure, stock prices are crazy high and debt levels are through the roof, but Marx is looking at something much more dangerous. He's examining how people think about risk when everything appears to be going perfectly. Here's some fresh data that should scare you. Credit card delinquency rates just hit 11.1%, the highest level since 2012. Meanwhile, margin debt, that's money people borrow to buy stocks, has reached $773 billion, up 15% from last year. And get this, household debt service payments as a percentage of disposable income are now at levels not seen since right before the 2008 crash. We're currently in what Marx calls the most dangerous phase of any market cycle. It's that moment where everyone thinks they're a genius because their investments keep climbing. People start believing that traditional rules don't apply anymore. Nobody thinks anything bad can possibly happen. And historically, that's exactly when everything goes wrong. Marx is identifying 3 specific warning signs that appeared before every major crash in modern history. First is the death of skepticism. When's the last time you heard anyone on financial television suggest that maybe stock prices are getting out of hand? Instead, everywhere you look, people are saying you must stay fully invested because time in the market beats timing the market. Second, everyone's desperately hunting for bigger returns. With interest rates dropping, people are throwing massive amounts of money into increasingly risky investment. Private credit deals, cryptocurrency speculation, meme stocks, options trading, all these markets are seeing huge inflows from people who are essentially gambling with money they can't afford to lose. Third, and this is the scariest part, it's not just regular people making bad choices. Pension funds, insurance companies, and university endowments are all chasing the same risky bets because they desperately need higher returns to meet their obligation. Your state pension fund is probably invested in private equity deals they don't fully understand. Your life insurance company is likely holding corporate bonds from companies drowning in debt. Even traditionally conservative investors are being forced into dangerous territory because safe investments simply don't pay enough to cover their needs anymore. This creates what Marx describes as interconnected vulnerability that didn't exist in previous market crashes. In 2008, the crisis was mostly contained to housing and banking. But today, risky investments are woven throughout the entire financial system. When the crash comes, and Marx believes it's coming soon, there won't be any truly safe place to hide. The trigger could be literally anything. A geopolitical crisis that disrupts global supply chains, a major corporation going bankrupt and exposing widespread accounting fraud, An unexpected surge in inflation forcing the Federal Reserve to aggressively raise interest rates again. Or simply the collective recognition that companies trading at 50 or 100 times their actual earnings make absolutely no sense whatsoever. What terrifies Marx most isn't any specific event that might start the collapse. It's the incredible speed at which everything could unravel once it begins. Today's markets are dominated by computer algorithms executing millions of trades per second. These systems are programmed to amplify existing trends, which means they make good times even better. But they make bad times absolutely catastrophic. When the mass selling begins, these algorithms will accelerate it beyond anything we've seen in financial history. We could witness 20% or 30% market losses in a single trading day. And once that psychological damage occurs, it could take many years for confidence to return. Marx keeps pointing to what happened in March 2020 as a preview of what's coming. Remember how fast everything fell apart? The market dropped 35% in just 5 weeks. But that crash was stopped by the Federal Reserve printing trillions of dollars and cutting interest rates to zero. This time, the Fed doesn't have those tools available. Interest rates are already relatively low, and printing more money would make inflation even worse. So when things start falling this time, there might not be anyone to catch them. But here's where Howard Marks separates himself from every other doomsday predictor out there. First, he emphasizes that having cash available isn't a mistake right now. Everyone keeps talking about how cash loses purchasing power to inflation. But Marx points out that cash provides something far more valuable than yield. It provides flexibility and opportunity. When everything goes on sale during a market crash, people holding cash are the ones positioned to take advantage of incredible bargains. Think about it this way. If you can avoid losing 50% of your money when the crash happens, you only need a 25% gain to be ahead of where you started. But if you lose half your money, you need a 100% gain just to break even. The math of avoiding losses is way better than trying to time the recovery. Second, he recommends focusing on what he calls quality at reasonable prices. Instead of chasing whatever trendy stock everyone's discussing, look for companies with solid fundamentals, consistent cash flows, and valuations that actually make mathematical sense. These are the businesses that will survive economic downturns and emerge stronger on the other side. But Marx is very specific about what he means by quality. He's talking about companies with little debt, strong cash positions, and businesses that people actually need regardless of economic conditions. Not some startup that's never made a profit, not some company trading at 100 times earnings because it has AI in its name. Third, and this might be his most crucial advice, he says you absolutely must prepare yourself mentally for what's coming. Most investors make their worst financial decisions during market crashes because they allow fear and panic to drive their choices. The people who prosper during downturns are those who can maintain their composure and think clearly when everyone around them is losing their minds. Marx has survived enough crashes to understand they always feel like the end of civilization while they're happening. Your friends will be panicking. The news will be terrifying. Your account balance will be dropping every day. But he also knows they always eventually end. And when they do, the investors who stay disciplined and stuck to their long-term plan are the ones who come out significantly ahead. Here's something most people don't realize about market crashes. They create the best buying opportunities of your lifetime. The same stocks that seem expensive today will be trading for pennies on the dollar. The same real estate that's overpriced now will be available at massive discount. But only if you have money available when everyone else is forced to sell. The smart money is already repositioning itself for what's ahead. Corporate insiders are selling their stock at record levels, hedge funds are raising cash, even Warren Buffett's company is sitting on over $300 billion in cash right now, the highest amount in Berkshire Hathaway's history. The billionaire investor isn't trying to frighten people with his warning. He's attempting to prepare them for what he sees as an inevitable reset in financial markets. He's been studying market cycles for 5 decades, and he's absolutely convinced we're approaching the end of one of the longest bull markets in recorded history. His message couldn't be clearer. The time to get ready is right now, before the storm actually hits. Because once it starts moving, it's going to unfold too rapidly for most people to react appropriately. The critical question is whether ordinary investors will pay attention to what one of the most successful money managers in history is trying to tell them. Howard Marks didn't accumulate billions by following crowds or believing that markets only move upward. He built his fortune by understanding that everything in investing is cyclical. Periods of prosperity are inevitably followed by periods of decline, which are then followed by renewed prosperity. Right now, he's convinced the current period of prosperity is nearly finished, and he's positioned his entire fund accordingly. His $20 billion in cash isn't earning much interest, but it's ready to deploy when the opportunities present themselves. The choice facing you is straightforward. You can continue listening to mainstream financial media telling you everything's wonderful and you should keep buying stocks regardless of their price. You can keep believing that this time is different and that markets will keep going up forever. Or you can pay close attention to what one of history's most successful investors is quietly communicating to anyone intelligent enough to listen. Howard Marx has never been wrong about the major turning point. He saw 2008 coming years before it happened. He called the dot-com crash when everyone thought internet stocks would keep climbing forever. Now he's warning about something that could be bigger than both of those combined.